everyone, and welcome to another deep dive, just for you. And today we're going to be diving into the world of commodities trading with the legendary Michael Marcus as our guide.
Absolutely. A fascinating figure. And we've got this incredible interview with him where he really opens up about his journey.
Yeah.
From, turning $30,000 into $80 million
Yeah.
to, all the tough lessons he learned along the way, the ups and downs, the setbacks, the comebacks. I mean, this is a guy who's seen it all.
Yeah, it's not just like the scale of his success, that's impressive on its own.
Right.
But it's the path he took to get there, Like, how did he navigate those early losses and learn from those setbacks?
Exactly.
And develop the resilience to ultimately thrive in such a high-stakes environment?
Yeah, and I think, his background makes it even more intriguing, right?
Oh, absolutely.
Having PhD fellowship at Johns Hopkins.
Like, the guy could have been a professor.
Easily chosen a comfortable academic career.
Right, tenure track, the whole thing.
Yeah, so what pulled him toward this unpredictable world of commodities trading?
That's a great question. And you know what? It seems like he almost had this inherent draw towards the markets, almost like a compulsive attraction as he describes it in the interview.
Yeah, he talks about that. And his early experiences, though, were a mix of just pure naivety and some pretty comical losses, actually.
Yeah.
He talks about trading with a friend, basically clueless about, contract sizes and how the market really works.
Just winging it.
Just totally winging it and seeing who could lose money faster.
That's hilarious.
It is funny in retrospect, but I mean, I can imagine how frustrating it must have been at the time.
Oh, for sure. But, most people would have just called it quits after those initial stumbles.
Yeah.
Like, okay, this isn't for me, what kept him going.
He mentions this stubborn refusal to admit defeat.
Oh.
Almost like he knew deep down he could crack the code.
Okay.
So he throws himself into study. He reads Chester Keltner's work, subscribes to his market letter, and ends up making his first successful trade in wheat.
So that early win must have been like a huge confidence booster.
Huge. I mean, it's like that moment where he finally started seeing the potential.
Right.
That trading wasn't just about luck, but about understanding these underlying forces at play.
Totally. Like, there's a system here.
Yeah, exactly. There's a system. You can learn it. You can figure it out.
Who can make it work for you?
Right. But that confidence, as we'll see, can be a double-edged sword.
Okay.
So he dives headfirst into the corn market, convinced he's spotted another winning opportunity.
Oh, boy.
This is the infamous corn blight trade.
Yeah, I've heard about this one.
Where he borrows money from his mom to go all in.
Oh, no.
Yeah.
That does not sound good.
It doesn't end well.
The corn blight trade, I mean, that ended badly, right?
It did. So initially, the fear of this corn blight drives prices up, and Marcus is riding high.
Okay.
But then a Wall Street Journal article hits, basically debunking the severity of the blight.
Oh.
The market crashes, corn prices plummet, and Marcus loses everything.
Wow.
It's a brutal lesson in the dangers of overtrading and betting the farm on a single idea.
So, I mean, that must have been devastating. I mean, to lose everything, especially borrowed money from your mom.
Yeah, I can't even imagine.
How did he recover from that?
It's interesting because he mentions not being able to hold down a regular job after that.
Okay.
Like deep down, he knew he was meant to be trading.
Okay.
And during this period of, regrouping, he meets two figures who become pivotal mentors.
Yeah.
Ed Seykota and Amos Hofstadter.
Mentor is always a crucial part of the hero's journey.
Right. What do they bring to the table?
Yeah. What was their influence?
Well, Seykota was a pioneer in trend following.
Huh?
One of the first to actually develop computer programs for trading systems.
Oh, wow. So he was at the cutting edge of that.
Absolutely.
Yeah.
So he instills in Marcus the importance of cutting losses, writing winners, and having the patience to wait for the right setups.
Okay.
And then Hofstadter, a seasoned broker, reinforces those same principles.
Okay, so it's like he's getting this from multiple sources.
Yeah, it's fascinating how these core ideas were presented to him early on from different angles.
Yeah, and that consistency almost, that repetition of these key concepts. I feel like that really cements these principles in his mind.
Totally.
It's not just hearing it once.
It's about seeing it play out in different contexts.
Right, exactly.
From different people with different experiences.
And what's interesting is that even with these newfound insights, Marcus admits he wasn't an instant success.
Right. He still struggled.
He was still jumping into trades prematurely.
He's getting caught up in the excitement rather than waiting for those, clearly defined setups.
So it's not enough to just have the knowledge.
Right.
You have to internalize it.
You have to develop the discipline
Yeah.
to actually apply it consistently.
And I feel like that's a challenge for traders at all levels.
Oh, absolutely. Even the most experienced traders can fall into those traps.
Right. You get emotional, you get greedy.
Fear takes over. Greed takes over. All those things.
They got to fight against those impulses.
Exactly. So for Marcus, the real turning point comes with a rather unexpected commodity. Plywood.
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 Okay.
Doesn't sound very glamorous, does it?
It does not.
But there's a fascinating story here.
All right, well, tell me what happens.
So it all unfolds during Nixon's price freeze in 1972.
Oh, okay.
The government imposes price ceilings on various goods, including plywood.
Right, trying to control inflation.
Exactly. But Marcus, the observant trader, notices something peculiar.
Okay.
The futures market for plywood is exceeding the legal limit.
Wait, so the government's saying plywood can only be sold for this price.
Right.
But in the futures market, it's trading higher.
Way higher, and no one seems to know what's going on.
Okay, how is that possible?
You'd think, right, that the futures market should reflect the actual price of plywood. But back then, the futures market operated in a bit of a gray area.
Okay.
So this artificial price ceiling created a shortage. And people who couldn't get plywood at the controlled price were willing to pay a premium in the futures market.
So it's almost like this legal loophole.
Yeah, basically the producers are forced to sell at the low price.
But the demand is so high that buyers are pushing up the futures price.
Exactly.
Interesting. So what did Marcus do?
He bought a single contract.
Just one?
Just one.
Okay.
And as he predicted, plywood prices skyrocket, going from $110 to $200.
Wow.
He rides that wave, turning his $700 investment into $12,000.
That's incredible.
It's like he finally found his rhythm, putting all the pieces together.
Yeah.
Fundamentals, in the market psychology, his own intuition.
It all clicked.
Yeah, exactly.
But I got to ask, we talked about that compulsive attraction earlier.
Oh.
Did it rear its head again?
It did, emboldened by this plywood success.
Okay.
He makes a similar bet on lumber, pouring all his winnings into a single trade.
Oh, no, not again.
Yeah.
Tell me he didn't lose it all again.
He comes dangerously close.
Oh, man.
So the government, having learned from the plywood situation, cracks down on lumber speculation.
Oh.
The market collapses, and Marcus is left holding a rapidly shrinking bag.
Oh, so he's sitting there watching his profits just evaporate?
He describes it as the worst 2 weeks of his life. It's just pure agony.
So what saves him this time? Another stroke of luck, or was it something more?
It's a combination of factors. There's a support level on the charts that helps him hold on.
Okay.
But it's primarily his sheer determination that gets him through.
All right.
He refuses to give up, and eventually the market turns around.
Wow.
His $700 after that wild roller coaster ride is now worth $24,000.
So he more than tripled his money.
Yeah.
Even after that huge drawdown.
Yeah, it's remarkable.
It's almost like those early losses, as painful as they were, inoculated him against despair.
Right. He had already faced the abyss, so this time he knew he could survive.
Right. He'd been there before.
Yeah. And that resilience is crucial in trading, wouldn't you say?
Absolutely. I mean, you're going to have losing streaks. You're going to have setbacks.
It's inevitable.
You got to be able to bounce back.
And perhaps even more importantly, the lumber debacle seared another vital lesson into his mind.
Okay, what's that?
Never bet everything on a single trade.
That's a lesson worth repeating.
Right.
Risk management is key.
Absolutely. So this near-death experience in the lumber market sets the stage for his next chapter.
Yeah.
He's battle-tested.
Right.
With valuable lessons learned and a growing confidence in his abilities.
So where does this journey take him next?
This is where he heads to Commodities Corporation,
Okay.
where he'll truly make his mark as a trading superstar.
So that's where he really takes off.
That's where the magic happens.
Yeah.
But that's the story for part 2 of our deep dive.
All right, so make sure you join us for part 2. We're going to delve into the Commodities Corporation years.
Yeah, we're going to see how he really becomes a legend.
Exactly. So stay tuned.
Stay tuned.
All right, so we're back, ready to unpack part 2 of Michael Marcus's story. Last we left off, he had just survived that crazy experience with lumber.
Yeah, that lumber trade.
Yeah, he emerges, battle-tested, some hard-earned lessons, and a decent profit.
Yeah, and it's interesting because that whole experience really sets the stage for his remarkable success at Commodities Corporation.
Okay.
But it's funny.
What's that?
Initially, they actually hesitated to hire him.
Really?
Yeah, because he didn't have a PhD.
They were like, what is this guy doing here?
Right. They were convinced that, advanced degrees were the key to trading success.
Oh, wow.
Yeah, pretty ironic considering his track record.
Right.
I mean, the guy could trade,
Yeah, he definitely proved them wrong.
Yeah, big time.
Yeah.
So luckily for Marcus Amos Hostetter, one of his mentors,
Right.
actually vouched for his abilities, and the firm decided to take a chance.
Thank goodness they did. I mean, he started with just $30,000 in 1974.
Yeah.
And within 10 years, he had turned that into $80 million.
$80 million.
That's unbelievable.
I mean, that's an astounding level of growth even for a seasoned professional.
It really is.
And you have to remember this, too, that Commodities Corporation took a 30% cut of his profits each year for expenses.
Oh, wow. Okay.
So he had to consistently generate significant returns just to maintain his account balance,
Right.
let alone grow it to that extent.
So that adds a whole other layer of pressure.
Yeah.
You're not just trying to make money.
You're trying to stay ahead of the fees.
Right, exactly.
And so grow the account.
So what kind of returns was he actually generating to achieve that level of success?
Well, he consistently achieved over 100% returns per year.
Wow.
For multiple years in a row.
Okay.
I mean, one year that stands out is 1979.
Okay.
When he rode the wave of the gold surge,
Yeah.
capturing huge chunks of profit as gold climbed to over $800 an ounce.
Okay, so now I'm getting gold fever just thinking about it.
Right.
But before we go any further, I'm curious about his experience as a floor trader.
Yeah.
We haven't really touched on that yet.
Right.
It seems like a little bit of a detour from his focus on research and systems.
It is interesting because he was initially drawn to that energy and intensity of the trading floor.
Right,
the yelling, the adrenaline rush, the chaos.
Yeah.
He even describes it as the most exciting place in the world.
Yeah, okay.
But he quickly realized that he wasn't cut out for that environment.
Really?
Yeah, I mean, I can't picture Michael Marcus getting intimidated easily.
Me neither. So what happened?
He actually describes himself as being too shy and timid.
Oh, wow.
To make his voice heard in all that chaos.
Okay.
He just couldn't compete with those aggressive personalities and that constant barrage of information.
Right. It's a very different skill set.
Totally.
From sitting down and analyzing charts. It's
Why?
You got to be loud. You got to be fast.
Yeah, you got to be assertive.
Yeah.
So even though it wasn't a good fit for him personally, he was still able to glean valuable insights from observing the floor.
Okay.
He talks about developing this almost subconscious sense of the market by picking up on these subtle cues.
Like what kind of cues?
Well, things like, the intensity of the voices.
Okay.
Those moments of sudden quiet. How the crowd reacted to news.
Interesting.
He would later apply those observations to his own trading.
Okay.
Particularly his surfing technique.
Okay, so you've mentioned this surfing technique a couple times.
Right.
I gotta ask, what is it?
Imagine a surfer waiting for the perfect wave, paddling hard to catch it at just the right moment.
Okay.
That's essentially what Marcus did in the markets.
So he's looking for those opportunities where the market's about to make a big move.
Exactly. He would identify these critical intraday chart points, those moments where momentum could shift.
Okay.
And then enter large positions with very tight stop-loss orders.
So he was taking advantage of the market's volatility, trying to ride those big waves.
Right.
But also minimizing his downside risk.
Yeah, minimizing the risk, that's key.
I can see how his observations on the trading floor might have informed that approach.
Absolutely. Seeing those big swings happening in real time,
Right.
feeling that energy.
Yeah, it gives you a different perspective.
Totally. But he also cautions that this approach might not work as well in today's markets.
Okay, why is that?
He attributes it to the increased participation of professional traders.
Right.
And the speed at which information now travels,
Right, everything's so fast now.
Back in his day, markets were slower to react, so he could exploit those lags, buying ahead of the curve and selling to, less informed traders.
Right, so he was able to capitalize on those inefficiencies.
Exactly. He humorously refers to them as the dentists. But
The dentists?
yeah.
Okay.
But the point is that there were more opportunities back then.
Okay, so today's markets are more efficient,
Much more efficient.
with algorithms making split-second decisions.
Right. All those easy opportunities have largely vanished.
So what's a trader to do?
Well, he emphasizes the need for traders to be more selective,
Okay.
waiting for those high-probability trades,
Okay.
where the fundamentals, the technicals, and the market tone are all aligned.
He calls these the optimum trades.
The optimum trades those moments where the odds are heavily in your favor.
So it's not just about seeing a chart pattern or
Yeah.
a news event.
It's about everything lining up.
Right. It's got to be the perfect setup.
Exactly. So patience and selectivity are key.
Don't just jump into any trade that looks tempting.
Right. Wait for that perfect setup.
Yeah, but how do you actually identify these optimum trades?
Well, he started with the fundamentals. Was there a real supply and demand imbalance
Okay.
that could drive significant price movement?
Right, you got to have a reason for the market to move.
Exactly. And then he looked for confirmation in the charts. Was the market moving in the direction the fundamentals suggested?
Okay, so the technicals have to support the fundamentals.
Right. And finally, he'd pay very close attention to market tone.
Market tone. Okay, that's a concept we haven't really discussed yet.
It's that intangible feeling you get when you're really tuned into the market's movements.
Oh, okay.
So he would look at things like momentum indicators,
Yeah.
sentiment indexes, even how many days in a row the market had gone up or down.
Interesting.
He was looking for those subtle shifts in sentiment
Okay.
that could signal a turning point.
So it's not just about looking at charts and numbers in isolation.
Right.
It's about understanding the underlying story, the narrative that the market is telling.
Precisely. And he stresses the importance of developing your own intuition, your own sense of market tone.
Okay.
It's not something you can learn from a textbook. It comes from experience, from being deeply immersed in the market.
You got to live it.
You got to live it. You got to breathe it.
Yeah.
You got to feel it.
Okay.
But even with the best analysis and intuition,
Right.
there's always that element of uncertainty in trading.
Of course. I mean, it's not a perfect science.
Right. So how did Marcus deal with the psychological ups and downs,
Right.
especially those inevitable losing streaks?
Yeah. Everyone goes through them.
Well, he's very candid about his own struggles with fear and greed.
Okay.
You know, those emotional impulses that can derail even the most seasoned trader.
For sure.
He talks about his tendency to fight back during losing streaks,
Okay.
trading even heavier.
Oh, to try to make it back.
Yeah, in an attempt to recoup his losses.
Yeah.
And he realized that this approach almost always backfired, digging him deeper into the hole.
Oh, yeah. Double down and then it goes against you even more.
Right. It just compounds the problem.
Yeah.
So he learned to recognize those emotional patterns within himself
Okay.
and to step back when he felt himself getting caught in that negative spiral.
So it's all about self-awareness,
Yeah,
recognizing those moments where your emotions are clouding your judgment.
exactly. Taking a break if you need to.
Yeah, step away from the screen.
Yeah, absolutely. Did he ever seek advice from other traders during those tough times?
Yeah. Did he talk to people about what he was going through?
He did talk to other traders, but he was very mindful of not letting their opinions unduly influence his decisions.
Right.
He would take in the information,
Mm-hmm.
but ultimately he had to trust his own judgment.
Right.
He realized that following someone else's lead often led to losses.
Yeah, it's a tough balance, you know?
Yeah.
Finding that line between collaboration and independent thinking.
Right, because you want to be open to other perspectives,
Yeah,
but you also have to trust your own gut.
exactly. And it sounds like his journey is really a testament to the importance of developing your own unique style, your own edge in the market.
It is, not trying to be someone else.
Right, be yourself.
Be yourself. Find what works for you. And this leads to one of his most insightful observations.
Okay, what's that?
Trading is ultimately about understanding human psychology and mass behavior.
Okay, tell me more about that.
He's essentially saying that the markets are a reflection of our collective hopes and fears and biases.
It's not just about numbers and charts.
Right. It's about deciphering the psychology of the crowd.
So it's like being a student of human nature,
Exactly.
observing how people react to information,
Right.
how emotions drive buying and selling decisions.
Yeah. And how those emotions can create these self-fulfilling prophecies in the market.
So how did he actually apply this insight to his own trading?
He developed a keen sensitivity to shifts in market sentiment.
Okay.
Those subtle cues that often precede a major move.
Right.
Remember how he talked about cotton, for example,
Yeah.
behaving differently from other commodities during periods of high inflation?
Right.
That's market tone in action.
Okay, so he's looking for these, like, anomalies.
Yeah, those little things that don't quite fit the conventional wisdom.
Right,
Because
yeah.
those can often be clues to what's really going on beneath the surface.
It's like he was able to connect the dots to see the bigger picture.
Yeah.
That emerges from all those seemingly random data points.
You're right. And it's fascinating how his approach to trading evolved over time.
Yeah.
Moving beyond just the technicals.
Right.
To incorporate these deeper insights into human behavior.
Yeah. And it's not just about trading.
Right.
He talks about how this understanding of human psychology can be applied to other areas of life.
Totally. He's interested in spiritual exploration, martial arts, even quotes Einstein
Really?
asking, is the universe friendly?
So it's like he's looking for that deeper meaning,
Right.
that connection between his inner world and the outer world of the markets.
Exactly. And with that, we come to the final chapter of Marcus's journey,
Okay.
where he shares his wisdom for aspiring traders
Right.
and reflects on the lessons he's learned along the way.
I am eager to hear those pearls of wisdom. Let's move on to part 3. All right. So we've really gotten to know Michael Marcus in our deep dive, from those early days in the markets to his amazing success at Commodities Corporation.
Yeah, it's been quite a journey.
It really has. And now I'm really excited to hear, what wisdom he has to share, those key takeaways from his decades of experience.
He's got a lot to offer, that's for sure.
Yeah.
And he doesn't hold back. He's very direct.
Okay.
About the lessons he's learned, from his wins and losses.
Right.
And it's fascinating how these lessons go beyond just trading, It's about psychology, risk management, self-awareness.
All right, so let's start with his advice for traders. What are those golden rules that he emphasizes?
Well, he kicks things off with risk management.
Okay.
His number one rule: never bet more than 5% of your capital on any single trade idea.
So basically, don't put all your eggs in one basket.
Exactly. He learned this the hard way through multiple wipeouts.
Right.
Before it finally sunk in.
So by limiting your risk, you're giving yourself room to make mistakes.
Right. You're giving yourself the space to be wrong.
Yeah.
And still have the resources to recover.
You got to be able to stay in the game.
Exactly. And he's also a huge advocate for using stop-loss orders.
Okay.
And not just having them in mind, but actually placing those orders.
So it's like taking the emotion out of it. You're pre-committing to your exit point.
Before you even enter the trade.
Right.
Taking that emotion out of it when things get heated.
Right. Because when you're in a trade, it's easy to second guess yourself.
It's so easy to get caught up in the moment and deviate from your plan.
And he even says if a trade doesn't feel right, get out.
Don't be afraid to cut your losses quickly.
Yeah, I like that, even if it's minutes after entering.
Exactly. Trust your gut.
Yeah, and it's that willingness to admit you're wrong.
Right.
To change your mind that can save you from those big losses.
Absolutely. No one's right all the time.
Right.
And then he reiterates that classic principle of riding your winners and cutting your losers.
Yeah.
Easier said than done, though, right?
For sure. I mean, this is where discipline comes in.
Huge.
It's so easy to get greedy and hold on to a winner for too long.
Oh, yeah, and watch it turn around on you.
Right. And on the flip side, it's hard to swallow your pride.
It is.
And admit defeat when a trade is going against you.
But that's what separates the successful traders from the rest.
Right, being able to stick to your plan.
Right, even when it's painful.
Okay, so what else does he talk about?
He stresses the importance of developing your own style.
Oh,
your own intuition.
Find your edge.
Find what works for you. Don't blindly follow others.
Right, even if they're successful.
Exactly what works for one person might not work for another.
Yeah, different personalities, different risk tolerances.
It's all about understanding your strengths and weaknesses as a trader.
And tailoring your approach accordingly.
Precisely. And, he also encourages traders to be mindful of market tone and sentiment indicators.
Right. Remember his example with the cotton?
Yeah.
Behaving differently?
It's all about recognizing those subtle cues.
Right.
Those shifts in the collective psychology of the market.
And maybe the most important thing he talks about is the psychological aspect of trading.
Right.
Recognizing that greed and fear can cloud your judgment.
Absolutely. And that need to be right. That can really mess you up.
It can.
So he encourages cultivating mental clarity.
Oh, so
that ability to step back and really assess the situation objectively.
So it's almost like he's advocating for this holistic approach to trading, where you're integrating those technical skills with the emotional intelligence.
It's all connected.
Yeah.
And he reminds us that trading is just one aspect of life.
Yeah.
It's important to have other interests, other passions.
Yeah, to maintain that balance.
Right, to prevent burnout.
Okay.
And remember that quote from Einstein?
As the universe friendly.
He's universe friendly. And it seems like he found that sense of friendliness, that inner peace that allows him to approach the markets with a clear mind.
I think that's a great lesson for all of us.
Yeah.
Not just in trading, but in life.
Absolutely. And on that note, I think we've reached the end of our deep dive.
Yeah, into the world of Michael Marcus.
He leaves us with one final thought-provoking question.
Oh, okay.
If trading at its core is about understanding human psychology and mass behavior,
right,
could those insights be applied to other areas of life?
Beyond the markets.
Right. Could we use them to make better decisions in our relationships,
okay,
our careers, even our everyday interactions?
That's a fascinating question, and one that I think we should all ponder.
I agree.
What can we learn from Michael Marcus's journey?
Right.
How can we apply his wisdom to our own lives?
Both within and beyond the world of trading.
Exactly. So we hope you've enjoyed this deep dive.
Yeah.
We hope it sparked some new ideas and perspectives
And we'll see you next time.
for another deep dive.